Hi, everybody. TGIF. Who agrees with me on TGIF? Quite a wild week. Just want to remind everybody we have some astro events next week. We have the equinox Monday, and we have the lunar eclipse Wednesday. So here's a couple. My reversal candidates for next week are possibly oil. Gold is setting up, looking for that one more drive in gold. Where are we? Yeah, here we are. So here's the gold. Here's your 4 hour. Come on, baby. Go. Bling, bling, bling. My platform goes bling, bling, bling. Better try another pair. Okay, try now. Huh, gold's spinning. Gold's still spinning. Maybe if I do this. So my platform's glad it's Friday too. The gold sees the equinox coming, spinning around in circles. Spinning, spinning, spinning. Anyway, you guys know I'm looking for this third drive in gold. Maybe it'll come up now. And I want to congratulate everyone for capitalizing on the dollar debacle, the dollar crumbling this week. So I don't know what the story is with my gold chart. But I think the gold is a reversal candidate. I think the S&Ps are a reversal candidate between Monday and Wednesday of next week. Not sure I'm willing to make a call on the dollar turning. But FX John sent me some lyrics over a week ago, FX John, and I thought I'd give the song a shot. Since he took the time to write the lyrics, thought I'd give it a go. I know it's going to make Jax cry. I know you're going to say this song makes you cry too. I'm sure there'll be a few other tears shed, but it goes to the Police song, Every Breath You Take. Every trade you take, every pip you make, every stop you break, every win you take, I'll be coaching you every single day. Every look you show, every pair you trade, every pip you make, I'll be coaching you. How's that? Every pip you make, every stop you break, every trade you make, every win you take, I'll be coaching you. I'll be coaching you. What do you think? Did it make Jax cry? I don't know the chorus yet. Hello, Sheath. Welcome to LAR. Brooke, welcome to LAR. Hi, Ron. Dion Tolson. Midas. Who else is in the house? Is FX John in the house? Everyone welcome Sheath to our community. Welcome, Sheath. Nice to meet you. Do we have any other new handles in here? Ibby's here. Satish. Satish is new. Everyone welcome PH. Welcome Southeast. Abel's here. Ibby's here. BW, Fab, John. Parkmore, Jake, JM, Adinda, Fame, FXStreet Video, Artem, Pan, Abel, Ray. Everyone doing okay? It's like Hotel California Brew. Welcome to you too. You could check out, but you can never leave. Everyone, welcome Brew to our community. Maybe my gold chart will come up now. I've showed it to you guys all week. Yeah, the dollar still has some more downside, most likely. Okay, so here's a gold. Third drive looks like it would come in next week up around this 1300 level. It would diverge. So this is a reversal candidate for me. If we head up one more time to above 1290. So that means perhaps it's going to take a bit more weakness in the dollar to drive gold up. Also looking for a high in the S&Ps for at least a pullback. Even if the S&Ps are going to make new highs, I don't think they're going to march to new highs without correcting this correction. So here's the Dixie. Looks like a little rebound. There is some support at 94.5. I think all rallies to 96 will fail. I don't think we're done. I think we're going to 92, 91-ish. But I wanted to show you the S&Ps. Even if you're not a doom and gloomer, and you could still be a stock bull, I still think that we'll get still think that we're going to have some type of correction of this bounce. Okay, so we've rallied 240 S&P points. Why not back 120? Maybe 61.8 back. That'd be 1900. And then maybe it goes again, and that's how we get to 2200. We pull back to 19 and then blast again. But either way, I think there's a sharp correction setting up in the S&Ps. Is today the high? Are we going to 2060? Sure. But I think next week, both the gold and the S&Ps are potential reversal candidates. Some people would say to me this: well, Dale, if the market goes down, gold will go up. And I say to that, they've both been going up together, correct? S&P's going up. In fact, the gold's even been stronger than the rebound in the S&Ps. Correct? So let's just take a look at that. Here's your daily gold. And here's your S&P. Right? They've both been advancing together. So why can't they both come down together? You don't have to agree with me, but just give me a why that you see it. That both gold and the S&Ps have advanced together. Why can't they come down together? So if we get this pop here, so these are my two top picks for reversals next week. Gold and the S&Ps. Also, if you look at the COT in gold, you have retail, huge longs in retail, the retail traders, small spec. And you have huge shorts by the commercials. And this is going back several weeks. So the commercials are short the gold, small specs are long the gold. I think there are a lot of longs that could get creamed on a move to maybe initially 1150. I can't rule out 1100. So that's what I'm looking for next week. Just look ahead. Just a little look ahead for my trading warrior brothers and sisters. Remember, Pinker's the same guy that loved crude under 30 when everyone hated it. So I was buying the crude market at $28. So once in a while, I guess right. That's what I think, Midas. Well, you know, they didn't exactly go in lockstep. Yeah, 1100 would be 78.6 back. 78.6 back would be 1100. Right? We'd call it about a $250 rally from 1140, 1040, 1290, 250, take 78.6 of that, or even halfway back. You know, you're talking about 125, that would take it back to 1175. 61.8 back would take it back to 1150. So 1150, I think, is very doable, and probably does it in a hurry because down is faster. So I'm laying for that. If you don't like to trade the gold, Midas turned me on to an ETF that you may want to consider that moves conversely to the gold shares. It's starting to diverge here. So I know we're in FX, but I trade a lot of ETFs because sometimes it's hard for me to trade currency, facilitating this community, getting Skypes and screenshots and interviews. But anyway, this would take advantage of a fall in the gold and the gold shares, mainly the gold shares. So here we are down here. See, we put in a little reversal day here, diverging a little bit, but Midas has some targets up around $8. So from down here between 250 and $2 for a move back to $8. I actually think we could even get into the gap if we go to 1100. That would take it to 10. You know, that's a 4-bagger, 4 or 5-bagger. So that's my gift to you. And your timing doesn't have to be perfect. You're not going to get stopped out the same day. Capiche? Give me a why if you get it. You don't have to agree with me, just a why that you understand my rationale. Commitment of traders, 3 drives, an ETF that you could trade. Okay, Ron's looking to buy pound Aussie. Capiche, Forex Pipper. I think it's ICHE. Thank you, Ron. Ron's looking for a big move here. Is that risk off? This is a pair that Ricardo trades a lot. So if you're looking for a rally, I think this would be risk off, right? Risk off. Oh, he trades pound Kiwi, but it's pretty much the same thing. So Ron's giving you a couple of targets here. He's even looking at this gap here. Everyone thank Ron the Dutch from the Amsterdam trading floor for his look on pound Aussie. Thank you, brother. Thank you, Ron. So most people are probably pretty much exhausted. Anyone else having problems with the streaming? Hit refresh, Dion, or log out and come back in. So I know a lot of people had a great month this week, being short the dollar. I don't blame them for taking a day off, recharge their battery. Enjoy the victory, savor it. And I think next week's going to be a dynamic week filled with all kinds of reversal capable possibilities. Wow. So it probably has to go to new highs then, Tosin. So that's the opposite setup of gold. That's the opposite setup. Do you ever see them be right? And this is a retail trader at FXCM, 82% of them. So it's probably going to take new highs before we get all the bears trying to sell the rally out. So maybe the gold's a better play because you'll see 82% of the traders long gold. Retail traders. How many retail traders are long gold, Tosin? Everyone thank Ron for that view. How you doing, Dion? Judy, welcome to LAR. Everyone welcome Judy. 55? Okay. Everyone welcome Judy to her community. Make her feel at home. Sinatra's here. Ibby, Abel, Doug, VZ, BW, Fab. Pegasus is in the house. How have you been, Peg? Ray, Satish, Jake, Parkmore is here today. Alexandros is here. Nice full house today. JM, Addenda, Fame, Artem, the Grays, and Pan. So this is a trade I'll be stalking for next week. How'd you hear about us, Judy? Judy. You can just call me Coach. Who had a negative week in trading? Give me a why. Anyone in here have a negative week in trading? Yeah, if you listen to what Wayne McDonald said yesterday, and I recommend you listen to that interview that I did with Wayne McDonald yesterday. A lot of pearls in there. Brooke, you had a bad week. Let me encourage you. Can I encourage you, Brooke? Besides saying things, through YouTube? Okay. Besides saying things like you don't lose till you quit, here's my encouragement to you. It ain't nothing but a drawdown and a margin call. It ain't nothing but a drawdown and a margin call. But I ain't scared because I still believe the call. Never said I was perfect. That would be a lie. Never said I was perfect. That would be a lie. But I'm more right than wrong, and I can look you in the eye. Watch me fly. It ain't nothing but a drawdown and a margin call. Nothing but a drawdown and a margin call. But I'm not scared, 'cause I still believe the call. Thank you, Addenda. What do you got, Luca? around all the way to 54. Could be if the Dixie's going to 90. It almost looks like a head and shoulders from here. Thank you, Luca. Very nice looking cable. Everyone thank Luca. Nice technical work, buddy. That was Ron. Thank Luca. 167, huh? Okay. That's a nice bullish call from Luca. How have you been, Simon? Hello, Fab. How are you, Fab? Pegasus, how you doing? Tosin, hello, buddy. John, how are you? Parkmore, Mauricio, JM, Artem, Pan, how's it going? Good, long time. Taking a little break. Taking a break. Yeah, good for you. You had a good week, didn't you, Tosin? I'm sorry, Dion. Although you could be thankful for that when I sing. When I sing, if you have a bad connection, Tosin has a bad connection too, huh? Anyone else having trouble with the audio? Give me a Y if you are. Give me an N if it's coming in clear. Armand's in the house. He has a big cable call. A little bit, huh? It's breaking up. Choppy. Is it usually this way? Okay. Sorry, guys. I don't know what to do about it. Adinda, what do you think? Anything we could do about it? Maybe I should, let's look at Jax's look in the pound. Why don't you guys log out and come back in? Or refresh. Keep trying to refresh. Right here, 4580. Thank you, Jax. So this is the line, 4580. Nice look, Jax. Everyone thank Jax for his look at 4580 resistance, pivot on cable. I'm going to. I already have a toe in the water from yesterday, buying VIX stuff. Thank you, Jax. You want me to tune the guitar? Yeah, Rick's been asking me to tune it. I need a nice new guitar and a new chair. Fame said with all the pips she made in large, he's going to send me a chair. You never got my address, did you, Fame? For delivery. I know it looks like it has a triple bottom here, but this is all I need to see, Brooke. They probably will, but this is a confirmed low. So the real simple implicator says this is not the bottom. But, you know, we could rally back to the 12 and a half. But I don't think the bottom's in. Maybe back to 12 and a half here. Let's look for a retrace of this wave right here. Halfway back, 1220. Maybe back to the triangle breakdown. If it really gets aggressive, could take it to 113. Yeah. I hope that helps, Brooke. So I would vote to sell strength. Between 1220 and 1260. If you put a gun to my head. What kind of dog do you have, Jax? Send me a picture of your dog. I love dogs. Can I see your puppy? Everyone doing okay? It's my hope that I've added value to your trading experience at FXStreet this week. No such thing. No such thing. What's the breed? Bulldog, pit bull? He talks though, like Astro and the Jetsons. Rye rub you, Rex. Rye rub you, Rex. Is he like Astro and the Jetsons? He talks. So guys, Friday's a good time to start looking at weeklies. Assess what kind of week we had. Got to call this a pretty ugly week, and in the end, looks like next stop on the break is going to be the 200 week is under 105. That's where I think we're going. If you really want to be bearish, you could call this a formation, call it 110, 125. That's 15. Actually gives you 95. All the way down here. But I think 105. He's bullish crude, the commodity king. Oh, or he said that. Well, then we're going to 50. The commodity king doesn't have, from what I've seen on CNBC. Okay. I think maybe he's going to be right. Yeah. But anyway, people like to fade Dennis. Yeah. Well, I was looking at the euro, and I could make a case for over 120. In fact, we did this with Cyric, had some long-term harmonic patterns. So I was thinking 115 first. This is the back test line of the euro. Right? This uptrend tagged it here. I caught this. I'm thinking up here towards 115. But if you look at a weekly, you could almost make a case for 125, right? Up here. And that would just be some kind of fib retrace. Could still be a bear market rally and go to 125. 115? Okay. That's the first stop. But if we get through 115, I think we could go to 125. Here's why. Oops. So if we take the high at 140, and we take the low from last March, 38 is 118, halfway is 122, 61.8 is 126. What do you think of that? And that would still just be a bear market rally, right? And then we go from 125 to 85, up to 125, and then to 85. That's my Noster Pinkert call of the for this TGIF Noster Pinkert call. 115 stalls out as long as 108 holds. After 115, I think we're looking at the 120 handle and then down beneath parity, 85. So if we get to 125 and then we take out 105, that would measure 85. So you guys, you don't have to agree with me, but I just want you to be able to see that, you know, we haven't even recovered 38% of last year's decline. This high wasn't even 38%. Let's see what you got, Brew. Nothing came up. Sorry, the chart did not come up on that. I don't know what you want me to see. I don't know. The bond vigilantes. 135. I don't think so. Confidence crisis into the U.S. presidential elections. People are going to be fearing Trump. That can happen. That can happen. I don't think it's crazy. What do you guys think of that chart? So that would be about 76 back, 88.6 back, and 88.6 is a number that Scott Carney likes. Scott Carney, the pioneer of harmonics, really likes 88.6% retraces. Yeah. So it's the attempt to reflate. Best way to reflate is to knock down the reserve currency. Okay, I like that. I like that Euro Aussie to 52. I agree. You want to show your Canada chart? That you show your Canada chart? I know you and Midas are looking for the same type of thing in USD CAD. I like Euro Aussie. I have a moving average at 270. Okay, Dion. So it's an attempt to reflate that eventually fails. Do you have that Canadian chart you want to show, Armand? So all the way up to above the 120 handle in Euro, count on this. Every trade you take, every pip you make, every stop you break, every single day, every look you show, every pair you trade, every pair you make, I'll be coaching you all the way up to 125 in the Euro USD. All right, you're already in. You're already in there. Okay. Ooh, I'm scared. Hi, Abel. I'm scared. All the witches are out today. Scary, scary day. Scary day. What a scary day it is. Oh, the witches. Oh, the witches are flying around on their broomstick. Janet Yellen's watching the witches flying around the markets looking for data to land upon. Okay. Got it, Tosin. If you love LAR, give me a Y. I'll tell you something. I certainly enjoy working with you guys. There's my Y. Hello, Ziggy. How are you, brother? Good to see your handle, bro. Hello, Ray. Thank you, Ray. Thank you, Abel, Lowell, Luca, Pipper. Thank you, Sinatra. Okay, thanks for dropping by to say hi, man. How did you enjoy the winter this year? This was your second winter. You glad spring's around the corner? How's your granddaughter and daughter and the family? Love you too, buddy. Anyone else love me besides Ziggy? Although that would be enough. Where's the love, man? Say hello to Blake for me next time you talk to him. Good. It was a good move for you, wasn't it? It was getting lonely for you in Vegas. Okay. So a pretty quiet session, guys. I'm not going to try and entertain you. I have some ideas for next week. We have an interview with Ipek Ozkardeskaya. Ozkardeskaya. He was the best new contributor. Good for you, man. I gained what you lost. He won the FXStreet Award for best new contributor. Ipek Ozkardeskaya. So that's going to be our interview today in about half an hour. I'm going to take a 5-minute break here, addenda, and you guys could continue to collaborate. I think that's Midas's buy area, 2890. And I thought, Armand, that was your buy area too, under 29. And that's where Ricardo was looking to do it as well, I believe. So I'll be taking a quick break. You guys know my breaks don't last that long. Oh, I've been showing myself the whole time. Smoking. Don't get mad at me. Okay. All right, I'll be back in a few. Okay, I'm here. Everyone doing okay? Dash, welcome to LAR. That's a new handle. Everyone welcome Dash. We're getting some confluence among the community for resistance levels in crude. Welcome, Dash. Okay, Zig, have a great weekend. Any other new handles in here? Roland's back. That's about it. Ricardo, you're very quiet. Well, there's Armand's look in Canada. Oh, Euro was, yeah. Okay. Nice triangle. Something like this from here. Like it, Armand. Everyone thank FXR for his Euro Aussie look. Always great to see what Armand's seeing. Who misses Armand when he's not around? He only makes cameo and guest appearances nowadays. I miss FXR when he's not around. Another LAR pioneer. He came into LAR on the wagon train. Yeah, he was a trailblazer in LAR, a trailblazer, and a gunslinger, and a gun, and a gunslinger in the market, a sharpshooter. Midas also a pioneer. Armand, Midas, and I and Ziggy used to sit around the campfire while we were on our LAR journey, drinking whiskey, smoking weed, doing mushrooms. All talking about how we would see our charts while we were hallucinating. Remember that long, strange trip, my trading warrior brothers? Dixie due for a pop, Dion. But a rally to sell in my view. Well, you are now, Sinatra. We'll do it again. Yeah. It's not our fault. We thought they were nuts. We didn't know. We thought they were nuts. Yeah. Tapas. We'll be more civilized and just have tapas. Right, Sinatra? So, guys, I'm going to have to leave a little early today. I have a dental appointment. I have a problem. I'll be leaving about 15 minutes early today. Not that there's that much to talk about anyway today. All the actions next week. In my extremely accurate and humble opinion. So, waiting to speak to best new contributor, Ipek Ozkardeskaya. Should be with us shortly. Yeah, it will be. You know, there was a long-standing target in Aussie. I remember a lot of people that were bullish. Yeah. I remember a lot of people were looking for 77 in the Aussie to complete a move up here. I think with the gold, maybe we could pull back at least to 73. So I do think the Aussie might be setting up some type of top here, especially if the metals come off. Oh yeah. I have a doctor named Dr. Payne, Payne. How you doing, Lowell? You have a good week? Lowell enjoyed Wayne McDonald yesterday. Saw his comment on Twitter. I'm expecting Aussie to peak. Looking for a high in Aussie. Starting to diverge here. Am I doing okay? So I'm talking, Dion, about a possible high. I know some people had weekly targets in the Aussie up around the levels that we're at now. 77 was a bandied about target for this rally in Aussie. No, it's spinning. I have a spinning platform today. I like, yeah, I'm having platform issues here. Starting to diverge in the pound. See this? Starting to diverge in Canada. Starting. This is the first time we made a new low and the RSI stayed above 30 in USD CAD. You don't have to agree with me, but give me a Y if you see it. This is the first divergence after the collapse above the 30 level. First one. So it tells you at a minimum to cover shorts. Doesn't necessarily tell you to reverse, but should have you thinking about it. Yeah. What was the report? Certainly isn't hurting the S&Ps. Oh, okay. Thank you, Midas. Okay. There's your weekly Aussie. Did nothing wrong this week. Okay, Rick. Thank you, buddy. You had a great year this week, didn't you? Didn't you have a good year this week? At least a good month this week, didn't you? Alien 2, Goldie 2. How's it develop? It's a Wells Wilder came up with RSI. I'm not sure. I think it's a 14-day average of prices or any other average. but I renamed it from Relative Strength Index to Real Simple Implicator. It's a big part of what I do. Thank you, Rick. You too, Abel. Love you, Abel. Watch out for moguls. Watch out for the moguls. Here's Rick's peso look. Weekly. Right here. Eventually, if we break down here, yeah, maybe we get a failing rally here, Rick. Everyone thank Rick for his weekly Mexican peso US dollar look here. Rick's been trading the peso like a master. Thank you, Rick. Yeah, I read all your posts, Picasso. I notice you like that Picasso reference. Saw you mention it on Twitter, calling your chart a Picasso. Everyone doing all right? So waiting for our interview. Waiting. The waiting's the hardest part. Tom Petty. The waiting's the hardest part. Let's see it. I'm not sure I see it. Are you calling this is going to be the head? This is the neckline, and we get a shoulder, and then we get a right shoulder. Is that what you're thinking? Okay. So the neckline could be here, or the neckline could be 120. Where's the neckline? 128, and then we rally back. Gives you about 110. 110. After a rally, 110, Armand? Okay. So that'll give you 112, 113, right? 111 down here. No, I know you're talking about. Okay, I have an interview now.
Hello?
Hello, is this Ipek?
Yes, this is Ipek.
Ipek, okay. Uh, how are you?
Oh, unfortunately, I do not have a webcam, so I
Oh,
sent a
okay.
picture.
All right, well, that's a nice picture of you. I'm Dale Pinkard. Very nice to meet you.
Nice to meet you too. Thank you very much.
Congratulations on your FXStreet award, Best New Contributor.
I'm very
So,
glad.
yeah, you must have made quite an impression because, there are a lot of new contributors every year on FXStreet. So, your work must have really stood out. What can you tell us a little bit about the kind of technical work or fundamental research that you provide on FXStreet, EPEC?
Well, actually, what I like to do is to look at the global picture. So I will always talk about fundamentals, set what's going
Okay.
on a fundamental picture, and then start talking about technicals. Because technicals is just like a tool that you use in order to feel where are the levels that we could go. What is the fundamental picture that gives the basis for these moves actually. So my best example for that is going to be the Australian dollar, where we were talking about the fact that even if we are picking some positive momentum above 75 cents levels, we would expect some officials to jump in and voice their discomfort about the appreciation in the Aussie, and this is just what happened. So in this kind of context, I really like to mix up the fundamentals with the technicals so that we have not only a story about trading, but also some more justification rather than only numbers. And I think that this is why people are more interested in what I'm writing, because they can read a story and they can follow up.
Yeah, it's nice to have a narrative that goes along and complements your signals because it gives you a
Yes.
bias, gives you your bias fundamentally, right?
Well, actually, it's not really bias, but you can just like feel and transmit the bias on the market. So in every situation, the market is going to be biased. So the short-term moves are 50-50. It's all about where people see, and it's all about higher information levels. But I think that the global picture has a bias, has always a bias, and this is all about the dynamics and interactions between the central banks and the macro pictures, or even like small deals like on the micro world could impact what's going on in a currency on in a week or in a month. So I believe that this is why it's very important to sit the technicals on a fundamental landscape in order to be more in order to simply being more convinced and be able to convince others.
Okay, you want to do a little time traveling with me, Ipek, and get into a time machine and take us back to the beginning of your career and how you got involved in analyzing global markets and what it was like at the beginning of your journey and how you ended up where you are today?
Well, actually, the very beginning of my career has been only with numbers. I have a quant analyst in a little Swiss bank, and I was writing algorithmic certificates. And I thought that it was too much numbers once again, so I missed this landscape, this fundamental picture or the narrative behind it, and I decided to move to portfolio management in HSBC in Geneva. So that was a brilliant job. So you could see all the markets, do portfolios, follow what's going on, where people are interested, and how all these short-term moves are actually triggered, if you will. For example, when I'm talking about a carry trade, I know what I'm talking about because this is something that you would do every night before going home on your portfolios. So I think that this experience in my portfolio management experience has been a positive compared to other analysts of maybe my generation. And it was basically a lucky hand. I met Peter Rosenstreich, who's a very brilliant analyst in Geneva, and he asked me, "Hey, I can see that you got conviction. I can see that you are interested. How about you just become an analyst?" And at that time, I didn't really know what it was about. I was mostly playing with like massive amounts of money, and I thought that being in the information business would be interesting actually to be more focused on what's going on in the market rather than just on our portfolios. And this is how I accepted the offer, and it has been 4 years that I'm doing this. And I had the opportunity to come to London. I'm just like I'm really not planning to stop here. I will be moving around, and more you see, more you learn, better picture, more you have more angles to analyze what's going on. It's just my plan right now.
Yeah, it's an evolving deal, isn't it? And if we're not growing, we're dying. What do you think of
Well,
that?
I think that's a brilliant saying because I was mostly in Forex, and then I could come to London and see that there's some more other like micro factors that could impact the what we are looking in Forex. So even in terms of current account or trade balances, you have like incredible stuff going on behind the scene, and it's very important to understand the underlyings that create this moves in the foreign exchange market. So now my intention is to go and travel and see what's going on, because the real economy has absolutely an incredible impact also on what's going on, especially nowadays that the central bank's action just lacks some support from the market and the real economy.
Yeah, what a transition we've made from market participants believe that the central bankers were omnipotent and all powerful to seeing now that the emperor has no clothes and central banks have been challenged and unsuccessful and confused. What's your narrative here with what
Well,
recently happened with Draghi's actions and then Yellen's actions in the last week?
actually, naturally, we have like some. At least my generation are talking about the fact that are these actions really worth it? Because it has been 7 years. So first, for a person like me, since I left university, I've never seen the Fed hiking rates except in December. So we have come to this point where over the past 7 years, some massive actions have been taken, and none of them gave results. And the worst thing is that we have seen this economy getting worse and worse. And for example, for the negative rates coming back to Europe and Draghi, I don't think that it's the best deal, simply because I don't think we need a PhD. It's just about looking what's going on in the street. I mean, especially about for Europe, where people are so much on their savings right now because they fear to lose their jobs. Cutting the rates to negative on deposits, I'm not really sure that it's going to trigger a consumer activity to enhance this consumer prices up to 2%. So when you look at these when you come back to fundamentals and stop thinking that the economy is something incredible, but bring the back in the street. I believe that the central banks are just moving very far away from the reality, and putting all this money in the market just doesn't come into Mr. Smith's pocket. And this is where I think that the divergence between the real economy and the financial markets have gone so far that we can't even think that one day it's going to be flowing back into real market, especially knowing that even for if I was a portfolio manager still right now, or if I'm going to be a portfolio manager, you can be sure that I'm not going to touch the Eurozone bonds because the risk return ratio are completely hilarious. I mean, 2-year bonds on Spain are paying negative yield. Come on, I don't think that we are just, there are all the reasons out there to lose conviction in central bank action, and I don't know how the credibility issue is going to be managed, so, from now on.
Yes, I can agree with you, Ipek, on the fact that perhaps a man in the street hasn't been helped by central planning, but I will say this in the U.S. that a lot of Mr. Smiths have 401ks, and a lot of them that did not lose their house and still have it have seen a recovery in their 401k and real estate values here in the U.S. Of course, it hasn't filtered down. That's why there's all this anger across the globe and the rise of nationalist-type leaders, strongmen, authoritarian-type leaders. But for asset prices, it was effective because now people have equity in their homes again, and the S&P was 666, and now we're trading 2050, 2100. So for certain people, it was helpful. Although, if we did not have food stamps here in the U.S., they are invisible breadlines. If people had to stand in line for food, we'd probably have lines stretching from New York City to Los Angeles. So, and also, isn't the purpose of negative rates to tax people on
Well,
their
actually,
savings?
there are
Go
two
ahead.
things. So first, with the US, the situation is somewhat different than the Europe because the US started this quantitative easing and zero rate policy way before. And when the US
Right.
started buying these bonds, sovereign bonds, were well cheap. So in that scenario, so that when the Fed stepped in and started buying sovereign bonds, not only it helped to recover the price, so there was this positive impact, but also they didn't have that much risk on their portfolio, and at the end of the day they started unwinding when euro started. So when we look at the eurozone and when the ECB decided to start buying these bonds, I believe, or I don't even believe, that the bond prices were already too high. The bonds were already overbought, so there wasn't very much of a value issue. So they weren't really readjusting the value in the market. These bonds were already overvalued. So I think that this is what made the base for this distortion that we are seeing today. And we have seen here in hectic market in the eurozone sovereigns, and at this point I even believe that with the negative yields, I don't believe that it's going to be helpful for the investors to get into these bonds for for a medium or long term position. So this volatility is, I think, very very sad and very dangerous for the eurozone's economic future and the stability. On the second hand, so negative rates are, of course, they are a signal. They are a very bad signal. Uh, if we are talking about recovery, it's people should be made enthusiastic about spending. People, you cannot get too much people to spend because they fear to lose their savings. So as people fear enough to lose on their savings, they will not be spending. If you're taking my money out of my pocket, I will not go and buy another Chanel bag. I will rather keep more. So this is what we call a liquidity trap, and Japan is known to be fighting with this since the last 2 decades. And there's even academicians that came out with a new theory saying that those are neo-Fischerites. Lower interest rates, if we are especially in negative territories, could enhance deflation rather than generating inflation. And it's all about the ratio between savings and spending. In these countries where savings are a good part of households' budget, I think that putting the rates negative are actually harming or damaging people's purchasing power rather than being a signal only.
Oh, sure, yeah. Many pensions and savers have been penalized by financial repression with lower rates for a long time and a negative rate where you have to pay the bank to hold your money, even though it's not our money, it's their money once it's in the bank. It's
And
supposedly an attempt to get people, since they're being penalized to save, to go out and spend, and they're getting exactly the opposite reaction. Where do you come down on? You know, it's my view that currency, even if you're a portfolio manager and you're trading other asset classes, that the currency markets are the linchpin for everything else that happens. It spins around it. You have a view on the dollar. Last year, we had a ton of bulls in the dollar. We've been moving sideways in the euro. I know emerging market currencies up until recently have been sinking against the dollar. What's your view on, say, for example, the dollar index? Is this a significant top in the dollar or just a pause to refresh?
well, actually, what we have seen this week is that the Fed now backs up and they're looking for 2 rate hikes only instead of 4 that has been announced. And I'm very skeptical because these 2 rate hikes are contingent on the global economic conditions. And for now, we haven't had any particularly brilliant news of recovery all over the globe. So the dollar index has now came below 95 for the first time since last October. And we were giving this signal of bullish US dollar last year because we were moving towards the first rate hike. And at this point, I believe that we may see some consolidation or even a softer dollar against the G10 peers, but also the emerging market currencies because the Fed has find itself tied up and it cannot just run alone for policy normalization because a stronger dollar is at some point going to be negative for the US economy and pull the US dollar and the Fed back into the pool of, the into the into in back to reality. So at this moment, I believe that the negative rate environment or the zero or very low policy rate environment should keep the volatility a bit high for everything that will qualify as emerging market currencies and high yielders because investors are still looking to generate return and even more when the yields are right now very negative. So I believe that this should help the Australian dollar, the Kiwi, but also maybe South African rand, or when the political turmoil is over, maybe the real to breathe a little bit because these currencies do offer some good interest rate gap and may be interesting for investors looking at not for mid to long-term investments, but at least who are who are in a hurry to generate some some cash in the short run. If I have an investment to make next week, say a bond is coming up, and I have my euros, I don't want to make let them sleep in a fiduciary account. I would rather go for Australian dollar or Kiwi. So I believe that the negative rate environment will keep the volatility high in high yielders. But even if this is the case, the high yielders as Australian dollar, the Kiwi, or some EM currencies could be well off and benefit from the US dollar weakness that we are looking to that we are looking for developing actually.
A lot of money flowing, EPEC, into the ultimate currency that has survived for eons, gold. And one of the bearish arguments for gold over my career has been opportunity cost of it having no yield. And now that we're moving to get negative yields, it actually is more attractive if you look for a continuation of a flight towards the yellow metal in the months and years ahead.
Well, actually, that's quite funny because for your generation, it was opportunity cost. For my generation, it has become mostly the fact that the gold market is now being traded in one click also. So we are moving away from the safe haven view of the gold, and we have seen some serious breakdowns in this negative correlation with risk assets over the past years, especially since the time the gold was testing the $2,000 level. So now I believe that the fact that we are very negative on the environment, and then the idea of having gold, especially in emerging markets, like for example in India, who is looking to have this gold fund, could help to give a little bit of shine to yellow metal. But nowadays, I believe that the gold has lost a lot of its appeal as safe haven investment, and this is why it is very difficult to say today that the opportunity cost is exactly what's causing this reluctance to get invested in gold. I believe that it is mostly the fact that the correlation, the negative correlation that we were looking at, is not as strong as before, and then this is why the volatilities in the gold market, or the potential of volatility in the gold market, is still keeping the investors a little bit aside in this market when we have some periods of high market volatility.
Well, yeah, actually, the gold really didn't work during the January swoon and the worst start to stock market history this year in January. And actually, they've both been advancing together, the gold showing more relative strength than the S&Ps. So is it more of a reflation trade than a safety trade?
Well, actually, so this is where there's no safety trade. The safety trades, I think that the new generation is now looking for solid reasons to invest in something they would call safe haven. So I believe that at this point, the blue chips, or for example, Swiss francs, is still very much up to date. Even if it has lost some value due to negative rates, people are still flying back to Swiss francs. And in 2014, Swiss National Bank had to print 15% more thousand francs, actually, as people would like to invest in Swiss francs as if it was gold. So I think that at this point we can just like see as some alternative currencies or alternative markets that investors are chasing after in order to replace the gold, or at least diversify the basket of safe haven currencies that they're looking to buy and keep in order to be safe of these huge market volatilities, like similar to what we have seen on in January, actually.
Okay, I'd like a definition. What generation do you label yourself as? A millennial?
I would label myself post subprime crisis generation, actually. So post
Okay,
2007-8 generation. If
okay,
that does make
and
sense.
besides me being an old man, what do? You put me in the baby boomer generation?
Excuse me?
Besides me being an old man, do you place me in the baby boomer generation?
No.
You're talking.
Well, I let you define yourself on that one.
Okay, all right. So, with your bias, if I may use the word, towards the Aussie and Kiwi, um, I would assume, since they're heavily influenced by China, that perhaps you're sanguine on China. If you're attracted by uh, having your money sit in Aussie and Kiwi.
Well, I am very attracted in the question of China, and will be shortly traveling into that country to see what's really going on. From what I know in China is that we are not looking, or the majority of the Western world is not looking at the right fundamentals. For example, we are looking at the consumer price inflation, while when you are in China, you just like rapidly know that you have capital controls in place, and you cannot just withdraw more than a certain amount of money per day, which means that with these capital controls, the inflation levels are kind of biased on the downside. So for me, for example, I would be looking at producer prices, or at the exports, imports, or some other factors that I'll be discovering very happily and very soonly. And I think that Chinese economy has the potential to grow. So now what PBOC and the Chinese government are trying to do is maybe seen as a little bit restrictive, but we have to know that it's like a 1.5 billion people economy, and some measures should be taken in order to prevent a potential overheating in such a big, massive economy who is craving for growth. I believe that the potential is there. The fact that we have revised the growth forecast to 6.5% is sad for the other for its partners, especially for Australia and Japan, who are actually trying to get on their feet by using China as a support. But China per se is having some difficult time, but has the potential and the resources, the necessary resources in their country, and could very well go against the slowdown in the economy. It is just a matter of how to do it without putting too much pressure or overheating in the market. It's all about stability. It's not only about growth. It's about stabilized growth. And I hope I will be able to give you more insights when I'll be traveling in that big and very interesting country very soonly, actually.
Yes, and they're trying to make the handoff to a consumer-based economy rather than an export-driven economy. I do have to say their capital controls, I don't know how effective they are, because there have been Chinese coming over with suitcases of money buying up U.S. real estate for years, and a lot of flight capital leaving China. Any comment on that?
Well, actually, from my experience, there might be very much capital in China, and the domestic economy. It's a country where the spending will be growing, because it's an emerging country, and people are looking to own things. So it may be luxury goods, or may be like basic needs, but there's so many interests for what is for new things. So this is why actually the international companies are now struggling and fighting back and forth in order to gain more market share into this huge market, and there's so much more to explore. So from my experience, once again, it was very difficult to spend money, even if I wanted to spend and buy things. So there are ways to deviate the capital controls in place. But if you're looking at the big majority of the population, I think that these capital controls are still very much waiting on the way that they live, on the way that they spend.
Okay. Speaking of China again, what do you think their geopolitical aspirations are in building up these man-made South China Sea islands and militarizing them? And also their financial moves of starting their own export bank and some other type of monetary transfer system away from, I believe it's what we have here, I forgot what it's called, where people wire money and they're starting up their own system. And do you think that they have a desire down the road to become the reserve currency and replace the dollar as a reserve currency?
Well, to be honest with you, I think that the yuan may one day become a reserve currency regarding the size of that country and how massive the economy is. We were talking about a $10 trillion economy, so now we're a little bit less after the crisis, but there is some, it is massive, so it may become. However, in order to do so, I think that the most important is not the size or what you propose in terms of quality, but mostly of your power of convince people, because being a reserve currency is not coming out and saying, okay, I am a reserve currency. Other countries, so the entire world, should recognize the yuan as a reserve currency. And to do so, I believe that the most important thing is the credibility. If the People's Bank of China are able to have this incredible power on the funds and do not give people the confidence that they could do or they could act as they wanted with this money and when they wanted, and in direction they wanted, I think that it will not gather enough momentum or conviction to become so. So the structural reforms are needed, and this black box should have a little bit of, there should be some bright light on this black box in order to start seeing what's going on. And maybe they have a good proposal, maybe they have something good to propose, and to convince people that this is the right way to do, or this is a new model, this is going to be a fresh breath on the world economy. But at this point, I don't believe that we are there yet, because the people banks of China has still a very big influence on the market, and this is a very restrictive market. And I don't believe that, I believe that there is some couple of years, maybe we're talking about 5 to 10 years, in order to be at the point where we will be discussing whether yuan could become a reserve currency or not.
Okay. May I ask what your native country is? Where you were
My
born?
name, I am born in Istanbul.
Okay, interesting. So maybe we could switch gears to what's happening in your former native land between Turkey and Russia, and now Russia deciding to leave. And I thought that there might be some type of skirmish before that happened. You never really know. What's your view on what's happening in Turkey, and you trade the lira, and what's your view on that, on the lira?
Well, actually, so Turkey is a big question. So Turkey is in the middle of a geopolitical crisis. And we can talk about Russia, we can talk about the Syria crisis, we can talk about
Yeah.
the internal political insecurities and crisis within Turkey also. So this is all adds up into a very massive gray cloud. So I wouldn't say it's a black box, but it's becoming somewhat gray. So we have seen the Turkish lira gaining over the past couple of weeks, and now we are testing the 285 level against the US dollar. And this is mostly due to the fact that the emerging market currencies are better bid because they offer higher yield. So now in Turkey, what we are expecting. So next week we have the decision of Turkish Central Bank, and this is going to be the last meeting of the current governor Başçı, and he has been under huge pressure actually in order to keep the monetary policy loose and keep the rates at low levels, the lowest he could, because this is the way that the government was asking or looking at, putting some more money in the system and sustain the economic growth. So now this is going to be the last meeting, and after that we see a change in MPC. So this is very interesting, because now the Turkish lira analysts are asking for a simplification in Turkish policy since months now, because nobody is in a position to understand very well what Başçı was trying to do. We have an upper corridor, we have a lower corridor, we have a benchmark rate, we have an average funding rate that the analysts are right now looking at. So it has been a while that everybody's asking for the simplification, and I believe that with the new MPC we will, and I believe and I hope that with the new MPC we will have this simplification, so that we can compare what's going on in Turkish lira, what's the worth, what's the rate, what's the actual real and nominal rate, so that we can compare the Turkish lira internationally to ZAR, to Brazilian real, or other currencies that are offering similar, say, risk and return ratios. So I
Well,
believe that.
well, I
So I
hope
believe
they do
that
simplify their currency situation, because the geo situation of them being adversarial with the Kurds, and them being our ally in NATO, and yet us being supportive of the Kurds, is really a mess, isn't it?
Well, actually, I'm not really keen on making political comments. It's a very difficult
Okay.
situation for Turkey to be in, because the Syrian crisis is just very overwhelming for people in Turkey,
Yeah.
but also for the whole Europe, and also for Syrians themselves who are fleeing their country
Yeah.
because they are desperate and they've got nothing to do. So I believe that the way that the political situation is evolving, or all these the deals or the negotiations on people's lives, I think it's rather very disappointing and very sad. So I really believe that I wouldn't like to, put a price on that crisis.
Yes. Well, all we could do is hope.
Exactly.
So it was a pleasure meeting you, Ipek, and I could tell now after talking to you for about 20 minutes why people want to read your writings and keep in touch with your views. What's the best way to do it? I have your Twitter handle is the same as your name. Are there other ways for people to follow you? Where can they find you on FXStreet or anywhere else?
Well, exactly. So I'll be like always on Ipek Ozkardeskaya if they want to follow me and just like come and talk to me. It will be just with pleasure. I love doing this as my job, so do not hesitate.
Okay. Well, congratulations again. It's a pleasure meeting you, and you now have a new follower, and his name is Dale Pinkert. I'm going to be following your writings. I found your views to be refreshing. Good luck being a globetrotter. Enjoy. You're living the life, Ipek.
Well,
So
exactly. I'm trying to. Well, it was a
you're
pleasure
you're,
talking to you.
you're living the dream, Ipek. So congratulations on having your dreams manifest and living them.
Well, thank you very much. It was a pleasure talking to you. Have a great
Okay.
day.
Have a great weekend. Nice meeting you. Everyone, thank Ipek for sharing her views on the globe with us today and on economic issues. And you can follow her on FXStreet. And that's going to be close to a wrap for me. You could close the hangout anytime. Thank you very much. And guys, I think I'm going to be wrapping things up here. Did everyone enjoy her? Thank her. Okay. Kurdistan. One question. Okay. All right, everyone. So I'm going to wrap it up. I have my favorite thing to do and go to the dentist. So here's my wrap up. Still believe that the euro has a magnet at this back test line towards 115. I think we could be there next week, maybe some type of turn. Everyone knows I'm laying for a potential short in the gold next week, looking for a third drive to the top if it manifests. Here it is on the daily. So we'll see if this plays out next week. Just a quick reminder again, I know you guys think I'm a lunatic because I follow things like lunar eclipses and the equinox, but I know a lot of you know that when I interviewed Adam Button in February and he asked me what my views were on the market, and I said I thought we were going to bottom and there'd be a better shorting opportunity into April in the market. Well, we're almost there. We're a week or so away from April. And I do follow what W.D. Gann felt was important as far as seasons changing, market directions can do the same. So a couple of my potential reversal candidates for next week is the gold, the S&Ps, and why not throw in the energy complex. So I want to thank everyone for another great week in LAR. I know many Lyrians cleaned up, being negative the dollar into the FOMC. I want to thank everyone individually. Thank you, Forex Pipper, Sinatra, Group. Welcome to LAR, Ray, BW, Ron. Nice talking to you on Skype today. Dion, Rick, SW, Jax, Midas, Ricardo. Thank you for all your great work. Midas, thank you for your great work. Satish, welcome to our community. Ibby, Abel, Doug, DZ, Fab, Roland, Abel, Pegasus, John, Lowell, Mauricio, Tozen, Parkmore, Marquez, JM, Luca, Dinda, Fame, Artem, The Grays, Ali, who called the move in crude based upon options expiring yesterday, Pan, Shees, welcome to LAR, and Jake. And have a great weekend, everybody. And I'll see you on Monday. Remember, don't just count your pips, count your blessings. Enjoy your weekend. Ciao, inshallah, shalom, l'chaim. See you Monday. Thank you, Adinda. I'll see you Monday, my trading warrior brothers and sisters. Go smell the roses this weekend. Adios.